But moving on to a story emerging once again from RBI, where RBI has now ordered an immediate ban on IIFL Finance from sanctioning, disbursing gold loans. This after it flagged some significant concerns in its gold loan portfolio. Now, I was going through some of those concerns, and you know, essentially a few of them stick out because they relate to customers who have been putting their gold into IIFL, trying to withdraw that money. It does look like it's not in their best interest.
So, as I read the story, and in fact early morning comments that came from the MD of IIFL Finance, Nirmal Jain, I think what it seems to be this time around, and Nirmal Jain has gone on record to say that it is not a governance issue, it is an operational issue, which means we are not looking at a situation similar to what we have seen with either Bank of Baroda last year or more recently with Paytm. We are not looking at corporate governance, we are not looking at any fraudulent practices just as yet from the early reading of the reports, right? In my independent assessment right now as I'm reading the story. So it seems that it is not a compliance issue, it is not a governance issue, rather it is an operational issue. Now, what RBI has said in its directive when it asked IIFL Finance to stop issuing fresh gold loans to customers, it said that there are material issues which arise primarily, as I read it, the value of the loans disbursed versus the value of gold, which means if as a customer I happen to go to an IIFL Finance branch and I say, hey, I've got 10 grams worth of gold and give me 10 grams worth of cash in lieu of this gold, IIFL says that that valuation of the gold or whatever ornament or piece of jewelry which you're leasing on the basis of weight and purity is actually a manual process, and it is something which is done at a branch level by folks who are sitting in that branch dealing with customers, and there is a likelihood of some discrepancy up or down on the basis of the education and the sort of flawlessness with which your employees are able to actually assess the true value. So there is likely to be some sort of a discrepancy, and it is not something which is of real material supervisory concern, but rather it's an operational issue. And it often happens in this business that you don't assess the real value of the gold to the exact decimal point. So I think it seems right now that that there is an audit which has been issued by RBI, and RBI is saying only once that audit is completed can IIFL Finance and the RBI's directive towards it be reviewed, whether it will be allowed to issue fresh gold loans or not. Now, it obviously is a challenge for IIFL Finance because gold loans amount to about a third of its total loan portfolio. So we are looking at about 25,000 crore rupees worth of loans disbursed already out of a total loan book of about 75,000 crore rupees. So about a third of the total loans disbursed by IIFL Finance happen to be in the gold category. The larger message as I see it is that RBI is obviously going after the entire financial BFSI, NBFC, fintech ecosystem one after another, really making sure that there are no lapses, there is nothing left to chance, and the customers at the end of the day don't end up losing hard-earned money by way of either falling for lack of KYC issues or for getting a value in loan which may be lower than the value of gold they have given in this case, or even the converse, that perhaps there isn't enough safeguards in place where IIFL is dishing out a higher amount in loan by taking a lower value worth in gold. So in both instances, either the company suffers and the company could pretty much, go bust on account of lesser collateral available against loans given, or customers could get hurt that they've given a higher collateral and there's a lower cash component available.
It does appear that it has both inverse relationship as well as, and apart from the material impact on value to loan on customers, it could have an impact on IIFL and its own existing gold portfolio, because the collateral seems to be a problem during auctioning process, which is what RBI has also flagged at the moment. So every time the loan amount is not paid back and there is an auctioning process, you don't get the same value by the way of that collateral. So I believe RBI, they're tightening the nose on entire fintech space, NBFCs, and it started apparently with Paytm about a couple of weeks ago, is now moving on to IIFL gold portfolio specifically, where there may not be any compliance issues largely when it comes to corporate governance, but are some serious issues that the RBI has flagged at the moment by the way of its gold loan disbursal.